So you're thinking about getting a new car in Malaysia? That's awesome, but I get it. The financing part can feel like a maze, especially when you're looking for a Sharia-compliant option. You hear these terms thrown around, like IJMT and MPO, and it can sound pretty confusing. Well, don't sweat it. We're going to break it all down for you, nice and simple.
Look, this is more than just a vocab lesson, right? It's about making sure you feel totally confident when you're making one of the biggest purchases of your life. Our goal here is to give you that clarity so you can choose the right path and drive off that lot feeling great about your decision. So you ready? Let's dive in.
Here's a quick look at our game plan. First, we'll touch on the basic rules that set the stage for everything. Then, we'll walk through the two main options you'll see, the lease path and the sale path. After that, we'll see how it all works in the real world, and we'll wrap up with some key terms you'll definitely want to know.
First up, the rules of the road. So why do these special financing models even exist? Well, to get that, we need to quickly look at the foundation they're all built on. Okay, so at the heart of all Islamic finance, you've got these three core ideas. First, any financing has to be tied to a real physical thing, in this case, your car. Second, and this is a big one, it has to be totally free from interest, or what's known as riba. And third, it's got to avoid any major uncertainty or speculation, which is called gharar. And that's the reason banks can't just give you a standard loan. They have to use these special contracts that are all about buying and selling a real asset.
With those rules in mind, let's check out our first path, the lease model. You'll see this long name, Ijara Muntahiya Bial Tamlik, but honestly, everyone just calls it IJMT.
Now, what's great about this one is how simple the idea is. The absolute easiest way to think about IJMT is just renting to own. It's like a long-term rental where the bank owns the car, you lease it from them, and the whole point is that at the end of the day, it's going to be yours.
So, how does this actually play out? It's a pretty clear four-step deal. Step 1. The bank goes out and buys the exact car you picked out. They hold the legal ownership. Step 2. They turn around and lease it to you for a price and a time period you've both agreed on. Step 3. You just make your rental payments month after month. And finally, Step 4. Once you've made that last payment, boom, the ownership is officially transferred over to you.
And here's the crucial part, the reason this is all Sharia compliant. The bank is making its money by leasing out an asset, the car that it actually owns. They're not just lending you money and charging interest. Big difference.
All right, so that was path number 1. Now let's switch gears and look at the second major route, the sales model. This one goes by murabaha to the purchase orderer, or as you'll see it, MPO.
MPO works on a totally different principle. Think of this as a cost-plus sale. The bank basically acts as a go-between. They buy the car you want, they add a profit margin for themselves that you've already agreed to, and then they sell it to you. The key word here is transparency. You know exactly what the car costs the bank and how much profit they're making right from the get-go.
The process here is also super clear. First, you find the car you love, and you promise the bank you'll buy it from them. Then, and this is a really critical step, the bank has to actually go and buy that car. They have to take legal ownership, even if it's just for a moment. Then, they immediately sell it to you at that price you already agreed on. And from that point on, you are the legal owner of the car. The bank just holds a security interest until you've paid it all off.
So why is this one compliant? Because it's a real trade, a straightforward sale. The bank's profit isn't interest, it's the markup on a product they bought and sold. It's a business transaction, not a loan.
Okay, let's pause for a second, because this slide right here, this is the whole thing in a nutshell. It all boils down to this. With IGMT, you're on a lease path, think rent to own. The bank owns the car until the very end. Your payment is a rental. But with MPO, you're on a sale path. It's a cost-plus sale. And the big difference? You own the car from day one. Your payment is an installment on that sale. Lease versus sale. That's the fundamental difference.
Okay, so we've got the theory down. Now, let's bring this back to reality. What does this actually look like for you from the moment you step into the dealership to that amazing day you make your final payments? You know, from where you're standing, the journey for both of these models is going to feel pretty similar. It all kicks off when you choose your dream car and fill out the financing application. The bank will then come back with an offer, and on that paper, it will clearly say if it's an IJMT or an MPO contract. Once you're happy and you sign on the dotted line, the bank buys the car and you get the keys. After that, it's just a matter of making those monthly payments until it's 100% yours. All right, we're almost there. To finish up, let's quickly arm you with some vocabulary. You know, understanding the fine print can feel a little intimidating, but knowing these key terms will make a huge difference.
Let's just quickly run through 3 big ones you'll definitely see. First up, pricing. It's simple. For IJMT, your document will talk about a rental schedule. For MPO, it'll talk about a fixed selling price. Next, there's early settlement, or IBRA. Now, this is super important for you to know. It basically means you have a right to get a rebate on the bank's profit if you decide to pay off the whole thing early. And finally, takaful. This is just the name for Islamic insurance. It's required, and it protects the car, which in turn protects both you and the bank. Makes sense, right?
And there you have it, the lease-to-own path with IJMT or the direct sale with MPO. Both get you to the same destination, driving your new car, but the legal road to get there is very different. It really all comes down to who owns the car and when. So now that you know the difference, the real question isn't which one's better, it's which path is the right one for your journey.